All right, Nick, we've been on a journey and we're going to continue that journey. We're basically laying out the fundamental blueprint for being a trader. We've talked about price and structure and liquidity. We've talked about what levels to start with and what levels matter. We talked about time frames. We've talked about days of the week. We talked about entries, exits, and stops and risk management. We've talked about the trap trade. We've actually laid out a blueprint for what a SFP trap traders type of trade, liquidity grab, whatever you want to call it, looks like. So we're going to take it a little bit further today, and we're going to give the opposite end of that trade, which is the break trade. And then we're going to talk about bounce trades as well. So we said it a lot. Really, if you boil trading down to a nutshell, just to like its most basic explanation, right? You find a level, price is either going to break, bounce, or sweep that level. Is there variations and nuances there? Yes. But at its core, those are the three options you have. Maybe it bounces sideways for a little bit, but it's eventually going to do one of those three things.
Yep.
So we've talked about the trap trade. Today is going to be about breaks and bounces, which means a break a structure up, right? We're breaking a high or some level, or we're bouncing off a support or resistance, right? Where a sweep is, we're sweeping that level and then breaking back in. So the trap play hunts liquidity. It's basically like the opposite of a break trade, right? So a break is a true breakout. A sweep or a liquidity grab is a fake out. It's a fake out to grab stops and roll it the underway. So a break is about acceptance. It's where price expands through a level, real conviction, real buying or selling, depending on which side of that level you're looking at, and holds. We're not chasing. We're confirming structure shifts. We're using volume and continuation and momentum. So here's the mindset around this, right? So it's the trap fails. It's not a trap, right? The break holds. Confirmation decides which side you're on.
Yep.
So let's talk a little bit about the sequence around a break. So price consolidates below resistance, right, for longs, or above support for shorts. Volume compresses, breakout energy is building, whatever you're watching, stochastics or OBV or delta or whatever you use for confirmation. Maybe it's just price action, right?
What do you use?
Well, I'm
You
just
used to use
trading.
OBV, but I think you moved away from it.
Well, yeah, because I used OBV when I was trading breaks, right? So I used OBV and I used CVD when I was trading breaks. But now that I'm trading traps, I don't need that anymore. I'm using delta candles. So I don't know, 6 months ago, whatever it was, I was trading breaks, bounces, sweeps. I felt like I was just doing too much, and now I'm just focused on strictly SFP. So I'm using just delta, not CVD even anymore. Now, when I'm getting like macro, trying to build like a macro bias or whatever, or I'm like doing shit on YouTube or doing live streams, I'll use CVD to kind of explain what's going on, right? Whales are selling into this strength or something like that. But when it comes to my entries and for how I trade and my edge and my strategy, I've just simplified it. It's just delta. I was using OBB before, and I'll tell you why. It's super simple. It's easy to understand. I don't have to be Einstein to figure out the equation. And there's a lot of eyeballs on it. OBV is one of the most commonly used volume indicators out there. And I'm a big proponent of trading self-fulfilling prophecy. The more eyes on something, the more people are watching it, the more likely it is to play out. And then CVD. I think CVD and OBV are probably the two most commonly used indicators, no matter what asset class you're trading, right? I think it's probably two of the more commonly used indicators.
Yeah, I don't disagree with that.
And you stochastics, I mean, stochastics is more momentum indicator than a volume indicator. But it's one of the most commonly used indicators out there.
Yep.
RSI, MACD. I don't think you can go wrong. We've got to kind of separate them a little bit, right? Volume versus momentum. But I don't think you can go wrong.
Calculated on volume though, right?
Yeah. I don't think you can go wrong is my point. I think here's where people go wrong though, is they are, every week it's a new indicator, right?
Mm-hmm.
Every week it's a new indicator. You don't have time to build a strategy or build an edge. And that's where people fall, falter. That's where people mess up. So in the brake sequence, it's the pressure build, right? So I'm just going to real quick, I'm just going to show my screen. We're going to talk about a simple brake and we're going to break it down. So I'm going to show this on the ES. This is going to be on the ES futures here. So again, number one is the sequence. Price approaches a key level. So on ES, this was the high. This was the low. This was the high. If you're a break trader, if you're trying to play a market structure, shift higher, or break a structure, I don't care what you call it, the break, right? This is where that break happens. That's that key level that you're looking for a break trade. A price consolidates below resistance for longs. That's what you're looking for. Maybe a bear flag's out or whatever. Ranges out for a little bit. Volume's compressing, right? Breakout energy is building. You're watching whatever indicators you're watching or just price action if you're a price action trader. It's like a coiling spring, right? So there's a spring coiling here. And then you're looking for step two, which is the expansion or the break itself. So clean impulse candle through structure, which we got. A clean impulse candle right through that structure. That's your break. That's what we're looking for here. So we're looking for that clean break above, right? Key level, swing high, swing low, London, Asia session, liquidity, whatever the level is that you're looking at. Now, we want to make sure that's confirmed. Like, what if you have a break, but it's on weak volume? What if it's weaker volume than the previous high, right? These are questions we have to ask ourselves. That's a divergence, right? You might think twice. Maybe you're walking into a trap there. But what's the next step after the break? What happens, Nick?
Confirmation,
right? But then usually
get a little bit of a back test.
Yeah, exactly. It doesn't happen every time though, right? But it happens a lot. And I think this is where a lot of people fall into the trap to where, they'll long the back test and then it just goes south on them, right? It just goes south because it's
engineered to make you screw up twice.
Yeah.
Like you long the breakout and then you short the breakdown and it goes right back up.
Yeah.
So you get stumped out twice.
You long the breakout, it comes and gets you. There's the back test. You go long again, and it was just an SFP, and it comes down, right?
Yeah.
So there's a lot of nuances to this. I understand, and I know, but what if you did this, right? So here's the screen. You can see the screen, right?
Yes, sir.
All right. So what if you realize that you're just getting trapped all the time, man? Like no matter what you do, how you read volume on SFPs, on breakouts, is there high volume?
Not always.
Yes, there is. A lot of times there's high volume.
SFPs themselves, yes.
Like when we break,
high volume
sorry. So when we break, right, is there a lot of volume?
Yes.
Why? Right? It's stop losses being hit, breakout traders jumping in. So even a fake out can look like a breakout if you don't know what you're looking for, right? But if you get that back test, coming back, what happens again here? Right there. So another
key liquidity engineering for higher.
Another break, right? Yep. Another break up, and then it's off to the races.
Oh, I couldn't see that. I'm sorry.
So could this be your entry?
Yeah. It's easy. Like this is what we talked about yesterday in New York session live. If you guys aren't over there, is how to hop into a continuation play. On the re-break, stop loss is below the low on the break. Right where his line is. Entry at the top, stop loss at the bottom.
Yep.
Continuation to the high.
Yep. So you can wait. Like I think everyone always thinks they're gonna miss a move, right? Everyone's getting in early, getting in late, second guess, doubt, analyzing 50 different things at once. This is this is a good entry. Like here's the back test. We take out the high that we put in on the break. That's a good entry. So is this if you know what you're doing on the back test, right? So is this if you know it's a real break and you put your stop loss in a clear invalidation point. Those are all three entry models for a break. Those are the three entry models for a break. Now, which one do you choose, right? Like how do you figure out which one you choose, do you think?
First of all, you journal which ones you're more successful at.
That's it. Right? Like you don't know until you do it, and you do it repeatedly over and over and over and over again. And this goes back to what we were saying before. This is where most people screw up. People will do it 5 or 10 times, they'll lose 70% of them, and then they go on to something else. They add something else to it, right?
Yeah. So there's a common saying here: if you can't identify the trap, what are you? You're the
Exit
trap.
liquidity.
No, you're the trap.
No.
You're part of the trap. If you don't know where it's at and you take a play and you lose, you were part of the trap. So reverse, and I think this is really hard for people to beat, and I think it's one of the key issues in overcoming existing training that's incorrect. You know, we come across this constantly in our groups. We just had a small conversation about it today in New York. You know, if you're losing 70% of the plays, the solution isn't to change how you're taking the entry. The solution is to flipping the psychology on how you did it. You know, this is where I get trapped and I take a long every single time and I lose it. So what do you do instead? You take the short, right? And if I'm taking a long or a short and this is where I get trapped for continuation every single time, I probably see that in my journal and I know to, you know, flip the psychology, do the contrarian play and take the continuation long or the continuation short. I don't remember which one I was on there.
Yeah, I know what you're saying.
Yeah. But it's crazy, man. Like I even had that problem for a while. And it's one of the most common things when bias flips, right? So if we're short, we're literally short for months now, like since April, May, right? In the market. And then there's going to be this area where the macro flips long and I'll start probably losing a little bit more of my short plays because the bias changed and I'm still like upside down on the bias. That's really a key indicator for me if the macro shifted and I didn't really notice it. If I start losing plays a little bit more.
Yeah, and I think too, I think a lot of people don't realize, like we just described 3 different ways to enter off of a break, right? And again, you don't know what's for you until you just pound it out, man. Just hit that pavement,
Pound it out.
get those entries in there, and then dissect the data, right?
Yep.
If you notice that you're falling for traps, then guess what? Take that, wait for the break, the retest, and then take that break above, right? How do you invalidate an SFP? When you grab an SFP, where does your stop loss go?
Literally above the high of the SFP. If it goes above that and closes, even on a like 5-minute candle, I think it just keeps going.
It's a real break, right?
Yep.
So if you were trading breaks, one logical area to go is invalidating that SFP, right? So if you're falling for traps over and over and over again, and I know a lot of people are, that literally we wouldn't have so many SFPs in the market if people weren't falling for them all the time, right? They wouldn't work. So I know people out there are falling for these constantly. But wait for it to invalidate the SFP, break that high that it put in on the break. There's your entry, right? And as you get better and you can understand order flow and delta and buyers and sellers, and you just get some experience under your belt, then maybe you can look for those retests or that initial break. I think all 3 are valid entry models, just depending on experience, how long you've been staring at charts, how many trades you've taken.
I mean, let's. I'm just gonna pull an example here of that, if that's okay.
Yeah.
So screen. All right. So we're simply looking at this is the in between London and New York into like New York's pump yesterday, right? So we had quite literally an Asia high that we were looking to play the SFP on yesterday. And this happened pre-market, so not a lot of people are even awake to take this, right? So it doesn't matter what this is. But if you take the SFP here in the short position and your stop loss is above the high and you're targeting simply the low of the liquidity, London lows, pretty safe, right? Pretty safe bet. It's invalidated the second it closes above this, right? Now, what happens the second it closes above the previous high? It just keeps pumping up, right? But you had a couple key back tests the whole way through it. And this is where people get chopped up. It's this zone right here where people start second guessing themselves over and over and over again. Now, the key area here is all the time that if you can backtest and hold what was once resistance as support, and then the continuation break, you have a new entry for a long position just to follow the play higher, right? It broke over, you take the entry, your stop loss is below the low, and then you keep going. It's always that simple, I think. Very rarely do you get a 5-minute break, a 15-minute break back above an SFP, and it just turns over and dies.
Very rarely. Yep. I
Yep.
agree.
And you start recognizing all the patterns, the shoulder, the head, the shoulder that starts to form up, and you just start building confluence from there.
Yeah.
I'm going to stop that.
So look, a trap, an SFP, a liquidity grab is a failed break, right?
Yep.
A invalid break is a what? Trap. Is that the same thing I just said? No, I'm saying they're the reverse of each other.
An invalid
right?
break is still an SFP.
Yeah. Invalid break is a trap. An invalid trap is a break, right? If price breaks, but volume doesn't follow, or the level is reclaimed fast, you're now watching for a trap trade. You're now watching for the sweep setup, right? Now, failing breaks equal future potential trap zones too. Every failed breakout gives you a map of where liquidity got caught, where new liquidity, right? So when you have a failed breakout, liquidity gets pushed what? A little bit higher.
Yep. People either move their stops or they move their take profits.
Yep. So I think for breaks, if I were to say, what kind of checklist should someone have for breaks, right? So it's a lot of times it's structure, consolidation, or compression before the break, right? Usually you get some chop. It's bull flags. It's bear flags. It's shoulder, head, and shoulder. It's whatever the little compression is, or just a swing high too, right? Swing high or swing low, depending on long or short. And then it's high volume expansion through the level. Momentum's confirming, meaning there's no bear divs, there's no weakness, no absorption. You retest that defensive level, that level you just broke on the retest, right? Clear target, clear invalidation, risk to reward 3-to-1 minimum for new traders, right?
Yep.
And if it breaks clean and holds clean, you trade the continuation. If it breaks dirty and reclaims fast, then guess what? You're trading the trap.
Yep. You are the trap.
Yep. And I think the trap is a failed break, which is just a liquidity reclaim, right? A break is a confirmed expansion, liquidity acceptance. Together, they form your entire decision tree at a key level, right? Sweep, break, bounce. We'll get into the bounce next. Do you think there's anything else on a break that we need to talk about?
I mean, there's tons of nuance, right? But
yeah, I don't think
you long it until I don't think you long it until it reclaims the SFP. I don't think you short it till it reclaims the range it fell out of.
Yes, I think that's probably the right answer. I do. I think that's probably the right generic answer that all novice intermediate traders should trade. Now, I grab wicks on SFPs because I know what I'm looking for, because I've traded thousands of SFPs, but I'm trading Bobby, the new guy in our Discord group, who's doing for 10 weeks, to wait for the reclaim. And I've told him that specifically, and he is.
Yep. And he does.
So let's talk about the bounce trade a little bit. And then I want to tie all three together with some psychology stuff and some traps that new traders fall into. But we'll kind of get into a discussion there. So we talked about the trap trade in a previous video and a little bit just now. We talked about the break trade, what those entry areas look like. We've talked in previous, this is like the 4th or 5th video in this series we've done. We talked about what levels to look for and blah, blah, blah. So bounce. When bounce is when the level just defends itself, right? You get a nice clean bounce off of support, resistance, POC, golden pocket, whatever your level is, right? So it's when price tests a key level and just holds it with confirmation. You just get a bounce off of it. You're not guessing about it, right? You're reacting to the structural defense that happens there. A lot of times too, right? So you have a double bottom. A lot of times what happens off that double bottom, the second leg of it, the W, right? Divergence
goes right back up. Oh yeah, you mean talking about indicators?
Yeah, just a lot of times you'll have a momentum,
looking for leading things.
Divergence, maybe exhaustion signals. You'll see absorption. You're buying the strength after exhaustion, not weakness out of desperation, right? So what's the approach? So the approach is this. Price approaches your key level, support or resistance, whatever it is, with decaying momentum. Volume and volatility compress as price grinds in that zone. You're watching for divergences. Price makes a new low, but OBV, MACD, CVD fail to confirm. The bounce begins before price reverses. Divergence is usually the first clue. Now, we don't always have divergences, but that's an A-plus trade, right? That's what we're looking for, is those high probability trades.
And I'll show you my little secret.
Yeah.
When we get through this little level, I can do it now if you like.
Go ahead. Well,
let's go back to the previous example we had.
Yeah.
I still have it pulled up on the chart here. I don't overcomplicate really anything with trading anymore, right? I try to keep it as simple as possible. I use a stochastic, literally my biggest forward indicator, right? And then this is just open interest. But we're going back into this breakout play here, right? So we have the SFP. If you grab the short, you have your 1% invalidation here. You know, the biggest indicator for me, if this is a continuation, is if we come back into our support resistance flip here and your indicator's oversold, right? So no matter what the indicator is, if my 5-minute is coming back down to the 0 line and we have not fallen back into our previous range, this bounce off that 5-minute oversold is probably going to be the one that comes back up and takes.
And look, that's literally the example I was talking about too. I mean, that's the double bottom.
Yep. So you got a bottom here from the SFP. You didn't reclaim the high. I would have probably even moved my stop loss to there, and then probably would have stopped myself out of the play with a little bit of profit as soon as it broke the trend line here. But as soon as this is smoked, you know there's the volume's oversold. People are going to, if they buy this back, you know, this is a rule. There's always exceptions to the rule, right? But it works 70% of the time.
70% of the time, it works every time.
Yeah.
So also like, if you're, let's just say you're swing trading like macro structure, like you're on a daily or a weekly chart, you see a double bottom, whatever, right? You're approaching a key level. Will you look for, what does confirmation look like? Will you look for like microstructure shifts? We go down to a 5 or 15-minute chart.
All the time.
Yeah. So if you're on, I don't even think I need to show this, but you're on a 4-hour chart, right? 4-hour low, 4-hour low. There's your trend line. Get to that level, right? What does confirmation look like? Confirmation looks like you're on a 5-minute or a 15-minute chart. You see a bullish div, and then you see a 5-minute or a 15-minute shift of structure up. That's confirmation, right? Mm-hmm. That's what confirmation looks like. So
yeah, that little example I showed you in the 5-minute, you can literally do that in the hour, the 15, the 4-hour, the daily. You know, if you're starting to come up out of an oversold area on a daily chart and it's back testing, you're probably getting some sort of hidden bullish divergence or bullish divergence in general. And then it rolls up, right? That 5-minute divergence rolls into the 15. That 15 rolls into the 30. The 30 rolls into the hour rolls into the 4-hour, and just kind of builds from there.
Yeah. And just so everyone's aware too, like where we were on the bounce, these are all cheat sheets that I've made, right? Like this is like not really adding nuance, not really, this is like the base, the foundation. This is like where you start, right? Mm-hmm. And then is there nuance and is there variations to bounces and breaks and sweeps? Yes.
Hundreds of them.
But you got to start. You got to start with the foundation. Yep. So bounce checklist real quick, price approaching level, fading momentum, up or down, right? Divergence confirmed, rejection wick or defense candle confirmed, microstructure break. If you are trading a 15-minute chart, let's just say you're zoomed in, you're swing trading intraday, you see a 15-minute double bottom, will you go to a minute chart sometimes or a 5-minute to see a structure shift?
Usually 2 or 5, yep.
Yeah. Structure reclaim, risk reward 3-to-1. That's what we're looking for. Plain and simple. I mean, the trap is the failed break, liquidity, reclaim, right? A break is the acceptance and expansion through the level. A bounce is just defense, exhaustion, reversal. Boom. The trap catches them, the break confirms them, the bounce defends the level they ignored. So when price respects your level and everything agrees, right? You got your confirmation, that's your green light. And we've talked about all the other stuff, right? What levels? We've talked about risk and risk management and how to figure out position size and proper risking. We've talked about entries and haven't quite talked about managing the trades as yet, but we will get there. So now I want to have a discussion. So
Sure.
look, we have laid out quite a bit so far, not just today, but in previous videos. We've talked about sweeps. We've talked about breaks. We've talked about different indicators and bounces. So here's the question: master of one or jack of all trades? New trader, they're 1 to 2 years into this. They can't figure it out. They're spinning their tires. I've seen it 1,000. I see it in our group. That's why I'm having the meet that we're having tonight. They're trying to do too many things at once, right? They're trying to perfect traps, breaks, bounces, shifts, volume profiles, NPOs. They're trying to do everything all at once, as opposed to building from a basic foundation.
Need some specialization.
Yeah. So look, good traders specialize, good doctors specialize, good fucking NBA players specialize, right? There's role players in the NBA.
People are better at the 3. There's people better at the 2. There's people better in the box. There's people better in everything, dude.
Yeah, and
there's some people they don't even want shooting.
Yeah, I don't know. Have you read Market Wizards? I mean, this is what they talk about. So Market Wizards is basically a book where a dude interviews a bunch of like traders, like it's like the guy interviewed all the people who wrote these books, right? Yep. And they all say the same thing, like
the guys who design the systems that most people follow.
Yeah, good traders specialize, right? 1 asset, 2 assets, 1 setup, right? Couple indicators or no indicators, depending on the type of trader you are. Not switching week to week, month to month, and that's what I see. That's what I see in people often, and having been doing this now for as long as we've been doing this, is no one can just stick to anything. It's the new shinier object, the new shiny thing. So my advice is this: I don't want a bunch of Ben copycats. I want you to pick what you like. If it's breaks, if it's bounces, if it's traps, if it's OBV, if it's RSI, I don't. At the end of the day, I don't care. But pick one thing and master it. Become an expert at it till you can do it with your eyes closed. You have to, and here's why. Nick, do traps setups work in every single market environment every single day? No.
Traps?
No. I mean, sometimes, right?
SFPs are existing.
Here, let me paint you a different picture, right? Okay. What if we are it's New York session, all we're doing is and we've been doing this all week, just chopping around VWAP, right? Are you going to take every little
New York?
Are you going to take every little wick above or below if that's all we've been doing?
No.
So are you going to try to catch, I know I should explain it better. Are you going to try to catch every single bottom in a bear market, thinking every little green wicks or every little green candle's a bottom in 2021, 2022, FTX is crashing, Luna's crashing, all the shit's going on. Are you trying to catch every single green candle?
No. I mean, like in those macro environments, the things I always say in the channel and Discord for the premium folks is, look, I am macro short and scalp long. So if I take a long, I'm looking for a key level and I'm out.
So you have to know how your edge works in every single scenario, every single context, every single market environment, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, holidays. You can't know that if you don't trade it the same way during those different contexts, right? News events, right? I mean, I have seen multiple times when we've had a lot of news since Trump has been in office, right?
He controls the market with his tweets more so than the market does.
I mean, it's unlike the Biden administration where we didn't hear from that guy for 4 months, right? It's every day. It's a tweet or
Every
something
15 minutes.
that's moving price, right? And I have seen a lot recently where price has just taken off, right? And it looks like we are sweeping a key level. We pump right into 4-hour liquidity. It looks like we're reclaiming it, and then it chops sideways for a little bit, and then it just goes higher. I have seen that many, many times now. You have to know these things. You have to know how news affects your strategy, how the volume, how the liquidity on the books affects your strategy. And you can't do that if you're changing constantly.
Yep.
And that's not just traps, that's breaks, that's bounces.
So what is the recommendation? Because I want to kind of tie this back to your just 6 months evolution. So find a system,
Well,
become profitable, and then let the data drive your refinement.
Yes. So I think, so a lot of people think you find an edge. I don't think you find an edge. I think you earn an edge. You earn your edge by doing the work, right? You're not going to get an edge if you can't stick to something and test it. How many times do you have to test it? I don't know. As many times as it takes.
Yep.
Is it 1,000? Is it 10,000? You want to be a trader? Are you okay with 10,000 trades? Like as many trades as
if it takes 10 years to become successful as a trader? Are you okay with 2 years? Are you okay with 6 months? You can't have an expectation on it. And that's really the issue for a lot of folks. At the end of the day, we talked about earlier in the pod that, Ben kind of refined his system into just SFPs, right? But he was already a successful trader. And yes, an edge is earned, an edge is developed. But I think there's we talked about this a little bit today in the New York session. I think there's a visual aspect to this too. I think different approaches just trigger your brain differently.
Yeah, I agree. So yes. But just say yes. But just saying like,
but not always flipping into something new.
Right.
You got to give it the data. You got to collect the data.
Yeah. So saying I'm trading breaks or I'm trading bounces or I'm a fib trader or I'm an Elliott wave trader or whatever, like that doesn't mean you're that thing, right?
It's just the most basic foundation that everything else is built on.
That doesn't mean you're that thing. You have to test it in all market environments. You have to know that you literally have to be able to close your eyes and trade that thing. That's the type of muscle memory. Dude,
yep.
I texted you the other day and it made me think of this right now. So I said, so my Tahoe has, what are those things called that lift, the stairs that go up and down?
What?
My Tahoe, it has the stairs.
Oh, the side runners?
Side rails or whatever that go up and down. And in the winter, when it gets really cold in Minnesota, they like stick, right? Because it's just so freaking cold. So I have to turn them off. So I turned them off. The next morning, I go out there to get my Tahoe. And without even looking, I reached for the step. I reached for that step and like fell forward and messed up my back. Like that's muscle memory, man. That's what you need in the charts. You need to see it, trade it. And I say it all the time. I see SFP, I take SFP.
Yeah. And it's like, how many of you guys have driven somewhere and then just completely forgot how you got there?
Yeah.
It's like, I worked on the road for years, 80, 100,000 miles a year. And most of my day is on the road. And most of my day, I couldn't tell you how I drove or where I got there or what I passed. Because I just plug it in the GPS and I go, right? My mind is somewhere else. Well, my, your frontal cortex is fucking just processing everything, but I'm not really remembering and keeping me safe. It's muscle memory. It's catching a baseball. It's throwing a football. It's hitting a bat and a ball. It's kicking a soccer ball. All these things. And they're soft skills too. Because if you don't constantly exercise them, if he didn't drive his car as much as he did, or his truck as much as he did, he wouldn't do that. So all these things are soft skills and they need consistent input to remain true.
But people have got to internalize this. People have got to accept it. That this is the way it is. It needs to become muscle memory. You need one setup, not 20. And what happens? So let me tell you what's happened to me. So I used to trade them all, breaks, bounces, traps. I was watching CVD and
Too much.
a million different things. And I was successful, right? But I'd also been doing this a long time. I still had a strategy and an edge with them. But since I have cut stuff out, not added stuff to, my win rate has shot up. I am making more money now. And here's the other thing. It keeps me out of bad trades because I'm no longer chasing. So I said it this morning. I said, just to people, we were doing our rundown, our New York Open pre-market stuff. And I said, hey, I just want to talk about psychology for a second. Like, I have not taken a trade this week. I have not taken a trade this week because my edge hasn't formed itself in the market yet. We haven't swept shit. We've just been breaking and running. Today we did a little bit and I caught a tiny little trade. But Monday and Tuesday, I sat on my hands, and that's a win for me because my edge did not form in the market. Does that mean price didn't move? Oh, we had a big green day yesterday, right? Price ran up, and I didn't chase it. I didn't play it. I just sat out and sat on my hand. I texted you, I was like, dude, I'm sitting here. I'm not even going to trade. Like, I know I'm not going to trade today.
I don't remember what you said after. Like, why am I here?
Yeah, like
we run the Discord. You got to be here.
Yeah, it's like I knew right away.
You can do something else. You can just mute, start your stream. Your levels are there. You're waiting for a key level.
Yeah, but my point was, I already knew. I was by like, I don't know what time that was, 9 o'clock my time, something like that. I already knew.
Like 10:45, yeah.
I already knew I was not going to trade today. The horse had left the stable. We didn't sweep nothing. I'm not going to fight that upward momentum. Yeah. I'm just not going to do it.
You know what else, too, is like all these things, I want people to take them to heart, regardless of the size they're trading. Because when I trade, when Ben trades, when we decide to put, I put on average $100,000 into a play. It's, $2,500, 25x, 100K, whatever it takes to get there. I'm entering a risk of $1,000 loss, every time I enter a play. It's easy to get into the and Ben's risking $5,000 usually when he gets into a play, right? As a loss point. These are not small numbers, but it's easy to get caught up into if your risk point is $10 or $20 or $50 or $100. You need to take it as seriously as if it was $1,000, $10,000, of risk in the market. So when we say we build an edge and the train has left the station or the play was just not there today, we're looking for sound checklists to put risk into the market to make money, right? And if you don't take it seriously at every single interval of your account size, you'll not take it seriously at any interval of the account size, and you won't grow. You just won't. So this is where it really separates the day trader, the person who wants to do it professionally, from the guy who just wants to risk $20 in the market to get a thrill. The hobbyist. If you can't move past, I have to take my $10 profit here because that's what my risk says. That was my 3-to-1 ratio. Or my $50 profit is just not enough for you, and it's the actual ratio you need to take profits at, you're never going to succeed at this. Everything we just said in this video is just going to go right over your head, and you don't care because you don't care about losing $20.
Yeah, and you're not going to care about losing 5,000 and then 100,000. Yep.
But you'll never get to that point because you'll never be successful. I promise you.
Let me give you, like everything you just said, I agree with. Let me give you a real world example of that. So I 10 weeks ago approached someone in our Discord who knew absolutely nothing about trading. He knew zero, zilch, nada, didn't know what a candle was, didn't know what TradingView was, knew nothing. And I saw that as an opportunity for myself to prove something to myself and to other people, that you can be a successful trader within 6 months. So that's my goal with him, is to make him a successful trader in 6 months. He's 10 weeks into this. He's batting a 50% win rate, which is, I guarantee you, better than half the people in our Discord who have been here for 2 years.
Yep, because he's taking it seriously.
He's
showing up. He's taking our lessons to heart.
But also because he's focused on one thing and one thing only. He still doesn't know shit. Yep. Right? He knows a lot more than he did 10 weeks ago, but he still barely knows anything, and he's batting 50% on trades. So he's trading one setup. That's it. Right? He's basically mimicking me. I'm basically cloning a little mini Ben is what I'm. Well, it's a big mini. It's a big Ben.
He's a big boy. He's a strong boy.
He's a world champion power lifter. Yeah. And a successful businessman. So he knows what it takes to win. He does. He knows what you have to do. The sacrifice. That's how he talks about all the time. He's like, dude, I haven't been in the gym. Like my guys at the gym are asking what I'm doing, and he's like, I have to sacrifice. Like, I want this. Right?
Yep. Tell him to bring his gym buddies.
Yeah.
Let me show you one example here.
Well, hold
Because
on. Let me finish my thought. So
Yep.
we have a trading journal, right? It's a pretty freaking dope trading journal I'm not going to show my statistics. This is nobody's business. How much money, blah, 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 blah. But I'm going to show you this, right? It collects all kinds of data and spits it out into a dashboard here. This dashboard literally breaks down everything from the time of day you trade to was it a news day, what type of trades you're taking.
I mean, literally everything. How long you're in the trade.
Yeah. Everything.
Your entry, your exit, your profit, where you trade best, you can design your own models, what model you took was best, all these things.
Yep. So we broke this down for Bobby. We broke this down. We spent time on Monday going over where his strengths and his weaknesses are, because he's a 50% win rate, right? He's targeting 3-1. And we found two glaring things. So we went over like his last like 6 losses, and every single one of them was he deviated from the plan. Every single one, right? Anytime he stuck to the plan, he won, with one exception. Every time, though, it was because he didn't stick to the plan. But on top of that, it also showed us another thing. So his average time, so he's, and he doesn't mind me saying this, but he's trading small money, right? It's a couple $100 in an account.
He's going through the motions.
He's going through the motions. He's going through the process, right? We're chasing the process, not the money. The money will come. And back to what you said, I told him, I'm like, look, dude, $200 is not a lot of money to you. I know that, but you need to fucking treat this like it's a $2 million account. Why? Yeah. Because if you're going to build bad habits right now and treat this like $200, like it's play money, then when you bring those bad habits into an account with real money, you're going to lose it.
Bigger money.
You're going to lose it. You're going to lose it all. Anyways, go ahead. What were you going to show?
Oh, I was just going to share this. So he won't mind that I share this, and I won't bring up whose it is, but oops, screen here. So this is a trader of ours is monthly journal, their P&L. I want you to discount the 21st here. This was a limit order that was left on the books. It's a mistake. It's a real trade, but it hit and he was gone out of town and didn't even see it. He got liquidated. Right? But he's not using large money. What he's working on is falling in love with the process of trading, being correct, collecting profits, small losses, bigger wins, small losses, bigger wins, small win, bigger wins, bigger wins, big win, bigger win, bigger one, big win, small loss, big win, small win. This is the process of trading. At some point in time, this journal will move from a $10 profit and a $5 loss to a $25 profit and a $10 loss, to a $100 profit and a $20 loss, to a $500 profit and a $100 loss. You have to build the correct habits to be a trader. The money is irrelevant if you don't treat the process correctly.
That's not enough for people. It's like we can tell them, but it's for most people, that's not enough. For most people, $20 is not enough, right? They need to turn their $500 into $1 million by the end of the week.
Yep. And this was honestly one of my biggest struggles in the earlier years was, man, I don't care about winning $20. Let me just risk losing $20 to see if I can win $40. And then you get to the $40. You're like, man, so what if I lose $20 and I don't collect $40? Oh, then it gets to $100, and I'm like, man, maybe it just keeps going, and then maybe I just don't take profit here, and still I only lose $20, right? It's a psychology loop that you can get stuck in, and it just destroys all your habits in trading.
Yep, and that there's a blueprint. There is a blueprint that most people ignore to becoming a successful trader. It's not glamorous. It's not fun. It's not some 21-year-old kid on TikTok saying he's a trader sitting in a rented Lamborghini in his father's Gucci suit. It's not that, right? It's not real. That's real. That's fake. Bro, if I see, like I see it, we're on TikTok now, right? If I see someone's profile picture is them doing this on a Lamborghini, you're a lifestyle influencer. You're not a trader. Yeah. You are a lifestyle influencer. And I got sidetracked there. I forgot what I was saying.
It's just bad habits. Follow the right people.
Yeah. Yeah. Well, follow the right people or follow no one and trust yourself. You know what I mean? Like,
That's what you did. You designed your system without really taking input from anybody.
nobody. Yeah. It took longer. It took a lot longer than I would like to have. And I lost a lot of money in the process. Right. But that's what I'm hoping to avoid with our guys, with Bobby, right? Like I told Bobby too. I told him, because we found two areas. One was he's got to stick to his fucking plan in December, and the second was his average hold time is really, really low, so he's not trusting himself, right? Like he's right. He's right. His ideas are right, but he's not. He's getting in the profit too quickly, and he's not letting the plays hit 3-1 or higher, right? So we had a big sit down, and I said, dude, if you can do these two things in December, if you can fix these, if you can just stick to your fucking plan, just tell yourself no, right? Tell yourself no, I'm not allowed to do that because it's not my plan, and let your plays play out. You're going to be profitable 4 months in, which is crazy. That's crazy. 4 months
there is now.
4
Very
months
close.
is crazy.
And that program's available for the people who just need to be drilled.
Everyone needs to be fucking drilled. Everybody. Very few people can be their own boss, right? Very few people have the discipline, the work ethic to be their own boss.
That's why the group comes in handy, man. That's why we have a trading floor. That's why we do the weekly sessions.
Yeah, you want 30 free days? Link down below. I'll put it down there. We'll get you 30 free days to come and just test us out. No strings attached.
At the very least, it'll tell you if you want to be a serious trader or not.
Yeah, it will, because you're going to hang out with serious traders. People who show up an hour before the market opens every day, hops in Discord voice, shares their screens, and trades for hours.
Yep.
It'll tell you right away. Or hey, maybe this isn't for me, and that's okay. Or maybe this is for me, and I'm with it.
Yep. You know, excuse me. There's a beautiful comment we had this morning in New York session. I'm just going to read it again. I won't tell anybody who it is. They probably wouldn't mind. But there's no screen sharing here, right? Okay, so it says, hell, I'm 9 years in and finally having decent guidance. Can you imagine floundering for 9 years and still doing it? Yeah, we said it earlier. What if it takes 10 years? What if this is the year, his 10th year, and he's finally got it? I love it, man. I love hearing that stuff.
Yeah. Yeah. I mean, it's easy. It's easy to get... It's easy to get lost, man. There's a lot of bad info. Statistically speaking, most traders fail. And it's not just most. It's high 90s, right? On average, 2 years to be profitable. But somehow every single one of them has a YouTube channel. Right?
Dude, there's thousands of YouTube channels.
Every single one has a YouTube channel and a Lambo. I don't know. Like I say, we wrap it there.
Fresh Lambo guys out there these days.
Yeah. I don't have a Lambo. I have a fucking Tahoe. Look, break trades, bound trades. We got some psychology stuff. But focus on one thing until you can do it in your sleep. Focus on that one thing. Everything else is fucking noise. Everything else is noise when you can focus on one thing, right? It's all noise. So I think for the next one, we talked bounce. We talked that. We'll talk a little bit more about entries and trade management next time. Then I think we're coming to, so we'll have, I think, 2 more podcasts in this format where we're kind of covering the basics. So next time we'll do a little bit on entries and trade management. Then we're going to talk about instruments and tools and order flow. And then that'll kind of round us out.
Instruments talking like we talked about today.
Yeah.
Gotcha.
Yeah, or I shouldn't say instruments. I meant indicators. My brain's fried, dude.
They're instruments. Well, instruments, the actual what you're trading.
Yeah. All right, guys. Appreciate y'all for watching. tactical-traders.com/trial. 30 free days, no strings attached. Come give us a shot. Give yourself a fucking shot, you know?
Yeah.
Later.
If it's something you had your mind on, this will give you the idea if you think you can do this professionally.
Yeah.
We'll let you know pretty quick.
Yeah. No smoke blown up your ass, just real trader shit, man.
Yep.
Later.